Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Deepak Nitrite. This stock was chosen in a Telegram poll with more than 700 votes recently. This is one of the largest chemical companies in India which has created a good amount of wealth in the last decade for its shareholders. Now you can listen to our videos in Hindi also. In the settings button, you can choose your preferred language as Hindi. If you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll discuss the business model of Deepak Nitrite in the beginning. We'll look at the stock performance in the chart, the financial performance of the company in the last few years, the reasons why the stock has given such a sharp correction, the outlook of the management going forward, the valuations, the risks, and then form an overall view on the stock. So Deepak Nitrite is a diversified chemical intermediates company. They manufacture chemicals and chemical intermediates which are used as raw material by the other chemical companies to manufacture their finished chemical products. Most of the products or relationships with their customers is a sticky relationship. Once their product gets approved and they start supplying to a particular company, they keep supplying to them for a very long time. A lot of their products are high entry barrier products, and the company tries to focus on niche chemistries. It's a research-driven company which does a different R&D to develop new products, debottlenecking to improve their efficiencies and lower their product costs. They have started their new R&D center at Savli, which was launched recently in October 2025. And now the company aims at using 60 to 70% of their power consumption from their renewable sources. In terms of exports, they export to more than 50 countries across 6 continents. They have 1500 plus customers and more than 34 products. One very interesting thing which differentiate this company from the others is their backward and forward integration. For a lot of the products, they are the lowest cost producers in India. That is their moat. Their raw material cumene they manufacture in-house. This reduces their dependency on exports for this raw material. When it comes to forward integration, they manufacture IPA from acetone. They are also setting up manufacturing unit, which is a massive project for polycarbonate in India. Deepak Nitrite post this expansion will be the first one to manufacture this in India. Now let's talk about their different product segments in detail, starting with the advanced intermediate segment. These are very complex and high performance chemicals used by other chemical companies. So their customers are other chemical companies for these products. They manufacture nitrites and nitrates, xylidines, oxymines, and several other products in this product segment, like agro intermediates, pharma intermediates also. The end user industries of these products are dyes and pigments industries, rubber and paper industries, pharmaceutical, agrochemicals, personal care, water treatment. So there are several end user industries. So they supply to a diversified range of industries. Coming to their second segment, which is the Phenolics business. So this was started in the last 5 years, but now this has grown much bigger than their advanced intermediate business itself. Roughly about 70% of the revenue comes from this segment now. This is done through their subsidiary Deepak Phenolics Ltd. This is the largest value driver in their business altogether. In this, they manufacture high volume products which are import substitutes like phenol, acetone, isopropyl alcohol, cumene. And in this category, this Deepak Nitrite is the largest producer in India. Now talking about the end users of these product segments, laminates and plywood, automobiles, construction materials, adhesives, and several other industries use these products. Apart from these two major segments which the company is already working in, they are now venturing into another big segment which is kind of a forward integration for their existing business, which is manufacturing of polycarbonate. They are investing about 8,500 crores in this venture. They will buy a German plant, relocate to India, and they will set up this. This will be the world's largest single location value chain plant, because right from cumene till polycarbonate, they will have complete backward and forward integration in this. Right now, India imports almost 100% of their requirement from abroad. So this is an import substitution play. Now coming to the end users of this product, this will be used in electronics, electric vehicles, medical devices, aerospace, packaging, and several other industries. Now let's talk about some competition and the moat which this company has. In Phenolics, the competition is mainly from imports. There are very less people who are manufacturing in India, but the imports give a tough competition to Deepak Nitrite from companies like Ineos Phenol, Mitsui Chemicals, etc. In their advanced intermediates, they have competition from both abroad as well as the Indian companies like Aarti, Atul, Meghmani, Naveen, etc. So I would say this is not a company which has high IP or entry barriers in their products, but in terms of scale, in terms of lower cost production, in terms of backward and forward integration, they have some moat. So this is a simple explanation of the business model of this company. Now let's talk about the stock performance post-COVID. It gave a very sharp rally and made a high of somewhere around 3,000. Then there was a sharp correction around 1600, 1700 zone. Then the second rally began up to 3,200 again, and now it is back to that zone of 16, 1700 again. So although it has created good wealth over a last decade, but still there is high cyclicality in their business because their business is impacted by a lot of competition from India and abroad. So the earlier highs of 3000 zone will act as a strong resistance for this stock, and this zone of 16-1700 will act as a strong support. So it is right now in a strong support zone. When it comes to financials in the last 5 years, in FY21, the company did a revenue of 4,360 crores, which went up to as high as 7,900 crores in FY23. So nearly double in 2 years from FY21 to 23. That was the golden period for this company. Then we saw stagnation, and in the last 2 years, the revenue is stagnated. And it did a revenue of about 8,282 crores in FY25. In EBITDA, they saw a sharp increase to 1,600 crores in FY22. From then onwards, the EBITDA is continuously falling, and in FY25, they did an EBITDA of 1,095 crores. Now, why is the EBITDA falling although the revenue is stagnant? Is because of the margin compression. FY21 was a golden period in terms of margins for this company, where they did an EBITDA margin of 29%. Then it started falling to 24%, 16%, 15%, and now in FY25, they did an EBITDA margin of just 13%. And still, if you see the quarterly numbers, there is no respite. This margin pressure is on account of pressure from imports, falling of raw materials, US tariffs, and several reasons. And of course, the lower demand from the end user industries as well. The company is into capex mode, setting up their polycarbonate unit. So the ROE is low at 13%. Promoter holding is about 49%. But this has gradually increased over a period of time. Decent cash flows, about 62% of the last 5 years, EBITDA got converted into OPCF, and working capital in terms of inventory and debtors is managed pretty well. So the basic fundamentals of the company are good. It is just that it is going through a very bad phase right now. Now, if you see the quarterly numbers, this September, the Q2 FY26 quarter, still we did not see a respite because year on year we saw a decline from 2,032 crores to 1,900 crores and the margins also compressed. But quarter on quarter, a slight improvement is seen from 10% to 11% in EBITDA margins. So is this really a beginning of a recovery phase? We'll have to see for the coming quarters and then decide. You see a lot of money locked into CWIP. Roughly about 2,046 crores as on September 2025. So this is the investment on their polycarbonate unit. This will eventually get converted into fixed assets when the unit gets completed. There are also some minor expansions going on in other products as well. If you see the shareholding pattern, although it is 49%, less than 50% as on September 2025, but in the last 4-5 years, we see an uptrend in the promoter holding, which is a good sign. They merged some other entity into Deepak Nitrite. That was one trigger for increasing the promoter holding, and they have also bought from the open market in a staggered way. The DIIs have also increased their holding over a period of time, and right now it is about 22%, which increases our confidence as shareholders in the company. Now, what is the reason for such sharp correction from 3,000 zones to 1,600 or 1,700 zones in the stock? It's a cyclical business. Pressure of raw material, pressure of competition, lower demand from the end user industries, all this impact this business drastically. So you have to play the right cycle in such businesses. US tariff impact also is there on this business. At one point of time, the valuations were pretty expensive, which got derated, and that led to the fall in the stock price. They are doing massive capex in their new ventures. The people are very nervous as to whether they will be successful in this venture or not. And earnings wise, there is clear disappointment in the last 2-3 years. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my view on the market. I share a lot of important news, views and portfolio allocation strategies, which will increase your portfolio returns. More than 9,000 people are daily in touch with me through my Telegram channel. It's a free channel. Now let's talk about the growth outlook. So they are setting up India's first fully integrated polycarbonate plant with a capacity of 1,65,000 metric tons per year. This is a huge project with an investment of about 8,500 crores. So it takes guts and confidence to take up such projects, and it is generally taken by big companies like Deepak Nitrite in India. They will develop new products, new variants in their R&D center going forward. They will also enter into strategic supply arrangements for selling these new products in India as well as abroad. The management is not giving specific numeric guidance, but they are giving an indication that the H2 will be better than H1 and FY27 will be comparatively better than FY26. Now let's talk about the valuations, which is the most interesting part. We'll compare the valuations in two metrics, price to book as well as EV EBITDA in this case. So if you look at the price to book, the last 10 years median is about 5 times and we are trading at around 4 times right now. So in terms of price to book, the stock is reasonably valued. In terms of EV EBITDA, it trades around 25x and the last 10 years median is around 19x. So it is slightly expensive in terms of EV EBITDA, but more or less it is near the support zone after cooling off near the 16-1700 zone. And post this cool off, the frenzy or the excessive valuations have washed away. And right now, I would say that it is at a reasonable valuation. It is not a very cheap or bargain stock, but it is at reasonable valuations. But if the earnings disappoint going forward, then the valuations may get further derated also. Now, what are the risks of investing in this company? It's a clear cyclical business, so the impact of the cycles would be there. The impact of the raw material prices would be there. The impact of Chinese dumping, competition within India, outside India, US tariffs, the lower demand from the end user industries, all these risks we have to monitor. Then they are coming up with huge capex in their polycarbonate plant. How well they execute it, we have to see. There is competition within India, outside India. So whatever they are developing, they have to be efficient in that in terms of cost and technology. And everything within India, outside India, generally there are several regulations they have to comply with. So if there are any changes in regulations in India or outside India, that could be a risk. So now that you've understood the business model of the company, the growth prospects, the financials, valuations, risks, what is our overall view on the stock? If you're holding this stock and you have not sold until now at the 3000 zone, now it is technically at a strong support zone and valuations have also cooled off. So you can continue to hold and see the results improving quarter on quarter basis. But if you're looking at a fresh entry, there are two approaches. Approach number one, start accumulating in a staggered manner. As and when you see every quarter the results are proving and when you get more confidence on the management commentary. The second approach is wait for a blockbuster quarter where there are clear signs that the results are back and then start buying from that quarter. But do remember, these kind of stocks need a lot of patience. If you are an investor who wants to make good money in 6 months to 1 year and come out, this is not that stock for you. It takes a lot of time and patience for the business to turn around, for the new capacities to come in and the companies to deliver. But eventually in the longer period of time, you make decent money in such stocks. It is very important to sell at the right time also. So that's about Deepak Nitrite. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel. It's a free channel by clicking the link in the description. Thank you for watching and have a wonderful day.